Hello, everyone. Great to see you. Wanted to come to you for just a couple of minutes here today to talk a little bit about perspective. So what I want for you to walk away from this video remembering today is that your financial house is not just your investments at Fidelity. For most of you, you also have fixed indexed annuities, which you are having those for safety and a potential better growth rate than something like a CD or a treasury. So I want you to think about your financial house as both of those combined. So let's take an example of someone who is moderately conservative and for easy math has 50% of their money in fixed indexed annuities and 50% in Fidelity. And most of our investments at Fidelity are in higher growth tech stock type of investments because we have the safety with the fixed indexed annuity. We want a little more growth on the investment side. So now you have those two items, and if one is 500,000 and in a year you make 4%, and the other one is 500,000 and investments in a year you lose 8%, then overall you made 4 over here, lost 8 over there. You are down 4%, and on $1 million that would be down about 40,000. Now that would be very normal in the marketplace when we think about volatility. Some years are lower, some years are higher, some years are down considerably, others are up considerably. So that's volatility. We have your fixed indexed annuities in your portfolio to take away some of that volatility and smooth everything out. So when you look at your investments at Fidelity, those are high growth, so they track what is the NASDAQ, and that NASDAQ right now is down about 20% from the recent high, the highest that it got, which was back in November. So now it's about 20% down from there. That is from the high. So from a year ago, we're about back to where we were a year ago. But if you look at it over the last 2 years, the NASDAQ over the last 2 years is up over 50%. And over the last 2 years, if you would have had a treasury fund of 10 to 20-year treasuries, that fund over the last 2 years right now is down 25%. Our growth stocks, that NASDAQ is up 50%. Safe treasuries down 25% down. So we really like the fixed indexed annuities, can't go down, and you have a nice reasonable rate of return for the upside for safe money. So again, just coming to you mostly today to have you think and use perspective and think about your overall portfolio as your financial house, where you're combining your fixed index annuities for safety with your investments. So you want to look at where are you overall, and where are you not just from a recent high, but where are you over the last 2 years, over the last 3, 4, 5 years. And that market side is really up over, if you go back much more than a year and a half, 2 years, and keep going back, it's up a lot. So it's come back down, but I think this is a short-term thing. The market dropped almost by 20% towards the end of 2018, and within 3 months it was back again. A lot of positive things could happen. The war in Ukraine could end, inflation could slow down. Maybe the Biden administration stops kind of getting a little bit crazy, it seems like, and things settle down a little. And then we'll see some normalcy come back. And I think the market will react well to that. There's always negative things that can happen, positive things that can happen. But certainly we're still overall, your investment portfolio, we're looking at those investments as something that's going to be there for 5, 10, 15, 20 years. So we don't want to just pull out of the stock market, because then when would you get back? And we're still, overall, we're bullish on the market, and especially with the tech side of the investments. So that was all I wanted to do today, was chat a little bit about where things are at. We're still very positive. The market's down, and I believe that's going to be a temporary thing. Now, and it could drop a little bit more, but it's volatility it's normal. It happens over the years. Every couple of years, you'll see the stock market drop like this. So I know every time that happens, and I have this tendency too, we start to think, yeah, but it's different this time, it's different this time. And maybe someday that will actually come true, but at this point, we don't think so. We're feeling good about the stock market, and I just wanted to get that message there out there to you. Think as your entire financial house, both your fixed index portfolio and your investment portfolio. We're looking forward to a great summer, and hopefully by the end of the year, this market will turn around and we'll see some strength in it. And hope you're off to a great start to your summer, and we'll look forward to talking to you soon. Thanks.